Breaking. Mazda has just unleashed a move so bold, it's shaking every corner of the US auto industry. Overnight, the Japanese automaker announced massive price discounts across its lineup. Numbers so steep that dealers and competitors are scrambling to make sense of it. We're not talking about a few thousand off a slow-selling model. We're talking about cuts that make even budget-friendly sedans and crossovers suddenly irresistible to anyone considering a new car. Industry insiders are calling it one of the most aggressive pricing strategies they've seen from Mazda in decades, and the ripple effects could redefine the market for months to come. Mazda's decision comes at a time when US car buyers are already fatigued by skyrocketing loan rates and record-high monthly payments. For many shoppers, affordability has been a distant dream until now. With discounts reaching levels that undercut both Toyota and Honda, Mazda is signaling that it's ready to fight for every single customer. Analysts say this isn't just a sale. It's a full-scale assault on the mid-range market, forcing rivals to either slash their own prices or risk losing a wave of buyers overnight. Showrooms across the country are already reporting a surge of calls and early foot traffic, with dealerships preparing for weekend crowds that could rival a Black Friday rush. But what's behind this sudden move? Insiders point to a perfect storm of factors: rising inventory costs, slowing EV adoption, and a fiercely competitive landscape where brands like Hyundai, Kia, and even Ford are discounting to keep sales afloat. Mazda, known for its stylish designs and driver's car reputation, has long balanced premium aspirations with mass-market pricing. Now, by cutting deeply into their margins, they're betting on volume to carry them through an unpredictable 2025. Financial experts warn that such an aggressive play can squeeze profits, but Mazda seems determined to win market share first and worry about balance sheets later. This strategy is already rattling competitors. Honda dealerships are reportedly reviewing incentive programs in real time, while Toyota's regional managers are holding emergency calls to discuss how to keep Camry and RAV4 sales from slipping. American brands aren't immune either. Ford and GM, already grappling with excess inventory of SUVs and pickups, could face even more pressure to lower prices if Mazda's gamble sparks a full-scale price war. And with consumer confidence shaky, a price war might be exactly what buyers have been waiting for. Industry observers say this isn't just about short-term deals. It's a potential shift in how automakers handle pricing in a post-pandemic market. Mazda's bold move could reset buyer expectations, making it harder for competitors to keep prices inflated while interest rates remain high. If buyers flood dealerships now, they may refuse to accept higher prices later, effectively forcing the entire industry to adapt. Economists note that this could send ripples through financing companies, suppliers, and even used car valuations, dragging down prices across the board and reshaping the entire automotive economy in the US. And the timing couldn't be more strategic. Mazda has a new wave of models poised to launch, from refreshed CX-5s to their hotly anticipated hybrid crossovers. By clearing out current inventory at fire sale prices, they're making room for next-generation vehicles while simultaneously capturing a massive customer base eager for value. For buyers, this is a once-in-a-decade opportunity to get behind the wheel of a brand-new Mazda at a price that would have been unthinkable just months ago. For the industry, it's a wake-up call that the old pricing playbook is officially obsolete. But there's another angle no one's talking about yet: a long-term brand play that could completely redefine how consumers see Mazda over the next decade. By slashing prices now, Mazda isn't just moving metal. They're planting a flag in the minds of car buyers who might have once written them off as a niche or almost premium brand. Imagine thousands of first-time Mazda owners discovering the company's sharp handling, upscale interiors, and reliability, then sharing that experience across social media and word of mouth. That kind of organic buzz can't be bought with traditional advertising, and it could pay dividends long after the discounts expire. Dealers are already reporting that families who came in looking for used cars are walking out with brand new Mazdas because the gap in monthly payments is suddenly razor thin. Financial managers are structuring creative deals, pairing these deep cuts with competitive financing to lure buyers who were sitting on the sidelines. Leasing specialists say they've never seen residual values recalculated this quickly, but Mazda corporate is signaling they'll backstop dealers to keep the momentum rolling. It's an all-in bet on market share, one that puts pressure not only on rival automakers but also on banks and lending institutions to keep up with the flood of applications. Meanwhile, Wall Street analysts are scrambling to update forecasts. Early projections suggest that if Mazda maintains this pace for even a quarter, they could capture an additional 3% of U.S. market share, an astonishing leap in such a mature market. That possibility has investors eyeing competitor stocks nervously. Shares of Honda and Toyota ticked down the morning after Mazda's announcement, a subtle sign that the financial world understands the stakes. Some hedge funds are even speculating that a broader correction in auto valuations could follow if the price war spreads, creating ripple effects well beyond showrooms. And the consumer response is nothing short of electric. Social feeds are flooded with photos of newly purchased CX-5s and Mazdas 3. Hashtags like #MazdaShock and #PriceDropChallenge. Trending as buyers brag about deals they never thought possible. Automotive influencers are rushing to produce content comparing Mazda's discounts to those of Hyundai, Kia, and even luxury brands like Lexus. This grassroots buzz fuels more showroom traffic, creating a feedback loop that competitors will find hard to break. What remains to be seen is how long Mazda can keep the pressure on. Supply chains are still volatile, and component costs, from semiconductors to steel, haven't dropped nearly as quickly as retail prices. Insiders whisper that Mazda has quietly locked in favorable supplier contracts months ago, giving them a cushion few rivals enjoy. If that's true, it means this discount strategy isn't a desperate fire sale but a calculated offensive designed to destabilize the entire pricing hierarchy of the U.S. auto market. And while other brands scramble to react, Mazda is quietly preparing its next move. A coordinated rollout of upcoming models and tech upgrades that could keep buyers hooked long after the current discounts fade. Sources close to the company hint that Mazda's engineering teams have accelerated timelines for their next-gen Skyactiv engines and hybrid drivetrains, aiming to showcase them as early as next quarter. By clearing dealer lots now, Mazda ensures that when these refreshed vehicles arrive, loaded with better fuel efficiency and advanced driver assist systems, they'll launch into a market already buzzing with Mazda's name. Behind the scenes, marketing executives are said to be crafting campaigns that lean hard into this sudden surge of attention. Expect to see bold messaging across streaming platforms, sports broadcasts, and social media, reinforcing Mazda as the automaker that broke the price ceiling and put drivers first. It's a rare chance to shift public perception from nice alternative to Honda or Toyota to the smart shopper's first choice, and Mazda knows the window to capitalize is short. Dealers, too, are evolving their tactics. Several large metropolitan Mazda outlets have extended hours, adding overnight sales teams to handle unprecedented walk-in traffic. Some are even introducing pop-up test drive events in shopping centers and business districts, aiming to catch customers who might not have considered a car purchase this year at all. This guerrilla-style approach is turning casual interest into signed contracts at a staggering rate. Meanwhile, competitors are frantically recalculating. Reports from Detroit indicate that GM's regional managers have convened emergency meetings to explore matching incentives on select models. Ford insiders describe tense strategy sessions where executives debate whether to cut prices or risk losing buyers to a brand they once considered a distant rival. Even luxury players like Acura and Infiniti are quietly offering under-the-table dealer cash to keep their leases competitive, an unthinkable step just months ago. Economists warn that if this chain reaction continues, it could rewrite the playbook for the entire auto industry. Prolonged price competition would ripple through suppliers, raw material contracts, and even the used car market, driving down resale values and reshaping how banks evaluate vehicle loans. Analysts caution that while consumers benefit in the short term, the long-term financial impact on automakers could be brutal, especially for companies already operating on thin margins. Some analysts warn that this could reset used car valuations nationwide, a ripple effect that may linger long after Mazda wraps up its campaign. Inside competitor boardrooms, executives are weighing drastic options. There's talk of accelerating new model incentives, pulling forward next year's rebate budgets, and even introducing 0% financing earlier than planned. But these moves carry heavy risks. Each dollar shaved off a sticker price slices directly into already thin margins. The fear is palpable that one misstep could trigger a race to the bottom, a price spiral that no automaker can sustain indefinitely. At the same time, Mazda dealerships are fine-tuning their customer experience to lock in long-term loyalty. Complimentary maintenance packages, extended warranties, and loyalty rewards are being bundled with the deals to ensure buyers don't just purchase once and disappear. Managers know that today's first-time Mazda driver could be tomorrow's repeat customer, and they're treating every interaction as the beginning of a decade-long relationship. Industry think tanks are now publishing white papers in real time, dissecting the broader economic consequences. Some predict that if the discount wave continues through the next 2 quarters, it could lower the consumer price index for transportation costs, a rare case where a single company's aggressive strategy nudges national inflation data. Economists call it a micro-shock with macro teeth, a phenomenon where one bold corporate move rewires expectations across an entire sector. And still, Mazda leadership remains deliberately understated. Their latest statement simply notes a commitment to customer value and market responsiveness, offering no roadmap, no end date, and no hint of when or if these deep cuts will taper off. That calculated quiet keeps the spotlight squarely on consumer excitement and competitor anxiety, a silence that speaks louder than any press conference. As the weeks stretch on and the industry watches with bated breath, all signs point to Mazda holding the cards in a game they started, and no one else is prepared to finish. And with every passing day, the ripple effect grows wider. Regional dealer associations from coast to coast are lobbying their respective automakers for immediate relief, arguing that Mazda's aggressive pricing is draining showroom traffic and threatening quarterly sales targets. Some dealers are even forming informal alliances, sharing data and strategies to weather what they're now calling the Mazda shockwave. It's rare to see rival brands cooperating in any way, but the stakes are high enough to override old rivalries. Logistics networks are feeling the pressure too. Vehicle transport companies report record scheduling requests as Mazda dealerships across the country beg for replenishment. Rail carriers and trucking firms are diverting capacity from other brands just to keep Mazda lots from going empty. This sudden demand surge is quietly disrupting the entire auto transport ecosystem, delaying deliveries for competitors and adding another layer of tension to an already volatile market. Meanwhile, consumer behavior continues to shift in real time. Buyers who once agonized for weeks over a vehicle choice are now making decisions in a single visit, afraid that waiting even a few days could mean losing the deal of a lifetime. Financing offices are operating like high-speed trading floors, processing approvals and down payments in hours instead of days. Lenders are racing to keep pace, adjusting underwriting criteria to move applications faster while keeping risk in check. Media coverage has only intensified. National morning shows run daily segments on the Mazda effect, while financial networks debate how long competitors can hold out. Automotive journalists are publishing deep-dive analyses, comparing the economics of Mazda's play to legendary price wars of the past, yet acknowledging that nothing quite matches the scale and speed of this one. Each headline drives more buyers to check Mazda's site, further fueling the cycle. In response, whispers are emerging that certain rival automakers may resort to covert tactics, quietly seeding rumors of limited supply or dangling temporary dealer cash under the table to prevent customers from defecting. These behind-the-scenes maneuvers reveal just how destabilizing Mazda's strategy has become. When legacy giants are forced into shadow games, it's a sign the market has shifted more dramatically than anyone could have predicted. Even government regulators are beginning to pay attention. Economic advisors in Washington are reportedly monitoring the trend to gauge its impact on consumer inflation metrics and automotive employment. While no action has been taken, the possibility of federal scrutiny adds another layer of intrigue to a story already brimming with corporate drama. Still, for buyers on the ground, the frenzy feels like an opportunity of a lifetime. Online forums are buzzing with tips on where to find the deepest cuts, while car shopping apps are reporting record-breaking traffic as people compare offers in real time. Some dealers have even started live streaming inventory counts to create a sense of urgency. warning viewers that popular trims could be gone within hours. All the while, Mazda's leadership remains remarkably quiet in public, offering only a few carefully worded statements about aligning with customer needs and embracing market realities. That silence only adds to the intrigue, leaving industry watchers to speculate about the next twist in this unfolding drama, fueling a sense that Mazda is playing a long game the rest of the industry hasn't yet deciphered. Some analysts believe the company's silence is deliberate, a way to keep competitors guessing while buyers stay laser-focused on the deals at hand. Every day without an official explanation gives Mazda more free publicity, as media outlets and autoblogs scramble to interpret the strategy and keep the story alive. Insider chatter suggests that this move may also be about locking in loyalty before the coming wave of fully electric vehicles reshapes the market. Mazda has been cautious about diving headfirst into EV production, instead focusing on hybrids and highly efficient combustion engines. By drawing in a massive new customer base today, they build a ready-made audience for their next-generation electrified lineup when the timing and the battery technology are right. On dealership floors, the energy is electric. Sales staff describe scenes more like a product launch for the latest smartphone than a typical weekend car sale. Lines of potential buyers snake through showrooms, with some customers placing deposits on cars that haven't even arrived yet. Trade-in volumes are spiking as well, with used car managers scrambling to assess vehicles on the spot just to keep the paperwork moving. The once sluggish market for mid-size SUVs and sedans suddenly feels like a feeding frenzy. Financial institutions are watching closely. Auto lenders are reporting a surge in applications, and some credit unions are already tweaking their loan packages to stay competitive. Insurance providers, too, are preparing for a wave of new policies, highlighting how a single bold move from Mazda is triggering activity across the broader economy. Meanwhile, whispers from supplier networks indicate that Mazda negotiated long-term component contracts months ago, locking in prices before material costs began to creep upward again. If accurate, that foresight gives Mazda a cushion rivals can't easily match, allowing them to sustain discounts long enough to truly alter the market landscape. Competitors are now faced with a no-win scenario: slash prices and risk margin collapse, or hold firm and watch market share erode. Some regional dealerships for other brands are already quietly offering flash rebates and unadvertised incentives, a sure sign that Mazda's gamble is forcing hands behind the scenes. And as this price war unfolds, consumers are beginning to realize they hold unprecedented power. Online discussion boards are filled with stories of buyers using Mazda's discounts as leverage in negotiations with other brands, walking into Honda or Ford showrooms and daring them to match the deal or lose the sale. What started as a single automaker's bold move is rapidly becoming a nationwide standoff, with every major player pulled into the gravity of Mazda's decision, turning ordinary car shoppers into savvy negotiators who know the market is suddenly tilted in their favor. Buyers are sharing play-by-play updates on forums and social media, detailing how they walked into rival dealerships, mentioned Mazda's markdowns, and immediately got counteroffers that would have been unthinkable only weeks ago. The transparency of this moment is rewriting the usual dance between seller and customer, and it's spreading far beyond Mazda showrooms. Fleet buyers are seizing the moment too. Rental agencies, rideshare companies, and small businesses with delivery needs are reportedly placing bulk orders while prices are at rock bottom. These purchases, which typically take months of planning and negotiation, are now happening almost overnight. That sudden spike in large-scale sales threatens to tighten supply sooner than expected, adding even more urgency for individual buyers hoping to snag a deal before inventories thin out. The used car market, once overheated from pandemic shortages, is feeling the shockwaves. Auction houses are reporting softer bids as buyers anticipate a flood of late-model trade-ins. Dealers who built profits on high resale prices are nervously recalculating how to manage a sudden depreciation across their lots.